Tonight I will be presenting the audited financial statements for the City of Emporia for the fiscal year ended June 30th, 2012. First, I would like to thank you for allowing our firm to work with the City over the past several years. We value the relationship we have developed and look forward to serving the City of Emporia and its residents in the future. Finally, I would like to thank the Treasurers and Commissioner of the Revenue's offices, along with Mr. Thrower and Ms. Cutrell, for their cooperation and assistance during the audit. Now I'd like to move to the financial portion of our presentation. The Independent Auditor's Report, located on page I of the Comprehensive Annual Financial Report, states that the City complied with generally accepted accounting principles. The report on compliance and on internal control over financial reporting that is based on an audit of financial statements performed in accordance with government auditing standards states there was no evidence of non-compliance with provisions of laws, regulations, contracts, and grants found during our audit. Also, we considered the City's internal control over financial reporting, and we noted no matters involving the internal controls in its operation that we considered to be a material weakness. Page 3 of your handout shows a summary of the cash position of the City. The overall cash position is $8,552,730, consisting of $6,754,355 in governmental activities, or the general fund, and $1,798,375 in business-type activities, or the water and sewer fund. This represents approximately a $1.5 million increase versus last year due primarily to better performance in both funds. Governmental activities cash increased by $1,039,179. Revenues increased by $1.4 million, while expenses only increased by $360,506. Business-type activities cash increased by $489,227, while cash provided by operations of $1,730,595 and interest income of $3,004 was offset by cash used for capital and related financing of $1.2 million. The overall position of the City has total assets of $37,103,139, exceeding total liabilities of $15,660,441, leaving total net assets of $21,442,698. Of this amount, $12,690 is invested in capital assets, net of related debt. This represents an increase in net assets over last year of $2,997,222, while only increasing debt by $373,955. The governmental activities has total net assets of $18,871,546. Of this amount, $12,151,817 is considered as invested in capital assets net of the related debt. This business type activity showed total net assets of $2,571,152. Of this amount, $760,873 is considered as invested in capital assets net of related debt. Exhibit 2 of the audit reveals that net assets for the governmental activities increased by $1.8 million due primarily to increases in most of the revenue categories. Business type activities have an increase in net assets of approximately $1.1 million. The primary reason being miscellaneous revenues of $805,874, along with increases in charges for services and continued declines in expenses. The net effect results in a $2,997,222 increase in total net assets before changes in encumbrances. Page 8 is a graphical representation of 4 significant items from the Statement of Net Assets of the City, which is found as Exhibit 1 of the audit report. Cash, fixed assets, debt, and net assets are displayed. Cash continues to increase while fixed assets increase modestly, offsetting declines reflecting accumulated depreciation. The city increased its debt burden after several years of declines and continues to increase net assets for the third straight year. Page 9 moves us back to the fund approach. In the fund approach, capital purchases are expended immediately and not capitalized with subsequent depreciation expense over the remaining useful life of the asset. Also, borrowing proceeds and servicing are recognized as incurred as other financing sources and uses. Revenues from governmental funds were $17,996,044, with taxes comprising 57.6% or $10,370,023 of said revenue. Total cost for government activities was $16,844,542, with public safety being the highest priority at $4,148,898, followed closely by education at $3,990,624, and public works at $2,638,197. Governmental revenues increased by $1,321,694 versus last year due primarily to increases in taxes, fines and forfeitures, use of money and property, and revenue from the Commonwealth of Virginia and the federal government. Expenditures increased, reversing a 3-year trend. They were up $1.2 million to $16,844,542. The increase was fueled primarily by increases in public safety and public works due to capital outlays. Before we move on to the water and sewer fund, I want to mention the level of liquidity here as it pertains to the general fund. The general fund portion of the government funds had an unassigned balance of $6,163,676, a restricted balance of $822,726, and a assigned balance of $3,386. Liquidity can be measured by comparing both unassigned fund balance and total fund balance to total fund expenditures. These percentages are 36.6% and 41.6% respectively. Roughly, this means at the same level of expenditures, the city would have more than 4 months of reserve to cover general governmental activities. On page 10 relates the information for the water and sewer fund. This is a proprietary fund, so the accounting is the same as that for GASB 34 statements that we have previously discussed. Operating revenues increased by $793,677 to $3,681,499. Operating expenses increased $47,495 to $2,274,511 to derive an operational profit of $1,406,988. The addition of interest income of $3,004 with the operational profit was offset by $279,952 worth of interest expense to result in a $1,130,040 increase in the fund. Page 11 begins our financial ratio analysis. The first ratio we examine is the current ratio, which compares current assets to current liabilities. The governmental activities ratio was 4.53, an increase of 1.61 over last year, while the water and sewer increased to 2.85. The trend in these ratios indicates that we have more short-term liquidity. The next ratio, or the quick ratio, also measures an entity's ability to meet its short-term obligations with only cash and accounts receivables. The governmental activities ratio rose to 4.31, while water and sewer increased to 2.69. Increased revenue in governmental activities and continued increases in net assets in the water and sewer fund positively affected these ratios. The overall ratio of 3.81 increased moderately, which means the city can continue to cover all of its current obligations nearly 4 times over. This year's results continue a trend of increased short-term liquidity, though probably temporary due to the tightening of future budgets and anticipating borrowing to fund capital improvement projects. Next, we will examine the interest coverage ratio. This measures the ability of an entity to service debt payments out of operating cash flow. Governmental activities have interest coverage of 30.48, another dramatic increase combined with the past 2 years' increases, which reversed 2009 skid, which returned to 2008 levels. The water and sewer fund increased to 6.36, reversing last year's decline. Overall, the total interest coverage ratio to 13.03, doubling last year's level. On page 14, the debt-to-equity ratio further examines the debt service capability of the city. The debt-to-equity ratio fell slightly, indicating that the city continues to service its debt. Lastly, on page 15, the debt leverage ratio measures the entity's ability to repay debt obligations from operations. The governmental activities time period to repay principal decreased to 1.68 years. This decrease continues to reverse the negative increase incurred in 2009 and is well below the 2005 benchmark, when it would have required 11.34 years to pay off just the principal of the debt owed. In addition, the water and sewer fund decreased to 5.72 years, a vast improvement from the 57.66 years for the benchmark year of 2005. Finally, overall, the city's debt leverage declined from 5.11 to 3.11 years, nearly 7 times less than the 21.47 years in 2005. In conclusion, the city had an overall increase financially, primarily due to continued performance in both revenue streams of the city. The city continues with its philosophy of retiring debt while continuing to meet its obligations to taxpayers, investors, and creditors. Most of the items of change were expected, as evidenced by the budgets. A legacy of favorable financing through bonds to take care of projects as they arise at very favorable interest rates continues, which results in future savings for taxpayers. The future task for the council is to address the challenges related to the upcoming debt leverage resulting from the new water plant coming online, combined with other infrastructure improvement projects. Short-term liquidity will be stressed due to declining revenue sources from the state and local levels, while continuing to reduce existing and new debt burden over the long term. Once again, I would like to thank you for your time tonight to present these statements, and I'll be glad to answer any of your questions at this time. Thank you.
Do the ratios for the utility fund, the water and sewer fund, as you had listed there, include borrowed money for what's coming along with the water treatment plant, or is that?
That had not hit as of yet. Only a small piece had hit at this point.
Very good. Best one we'll see in a while, I suspect. Enjoy it while you can.
Thank you so much for you.
Thank you.
And I'll tell those who came in late again that we do not have a quorum tonight, so we will not have a meeting. Thank you for your interest in what the city is doing, your attendance here at the meeting tonight. Good night.
Copies of that we could get to the slides.
It's all public
Get to
information. Once it's